Highlights of what we've announced today from my perspective. 2018 was a good year, good top line growth, good credit control, bottom line strong, and even after reserving for regulatory issues, we have got a capital position above 14%. If we look back over the last 3 years, I think we have now definitely got a much stronger foundation for the business, and off that, we have been talking today about how we now take the business further forwards.
Our confidence that we can deliver on the financial and strategic plans that we've set out this morning comes from the success that we've had over the past 3 years. And we want to leverage that strength into an increasingly differentiated, fast-growing and high-returning business.
Today has very much been anchored around what we are going to do in order to get to 10% return on tangible equity by 2021.
First is the value of our network. We talk about that network all the time, and I know that there's some skepticism around whether we can really monetize that. Well, the short answer is we have. We know we have a number of markets where returns are just structurally low, and they're holding us back. We have valuable franchises in this country, but that valuable franchise isn't generating profit to the extent that it needs to. Our focus there is to do what we can organically, focusing on expenses, focusing on deployment of digital technology to improve our own productivity. And we'll continue to pursue those independent and organic plans. But in addition, we know that we can be a disruptor in some of these markets. We're nimble enough to be a disruptor where we think that's the best way to convert our valuable franchise into one that can be fundamentally profitable.
If we put together a top line growing 5 to 7, cost growing below the rate of inflation, we will see the productivity of the business evidentially rise, and we will see the profitability rise. Lots of opportunities there to grow the profitability of the business, but one of the key things for us in terms of getting the return on equity up is over the last 3 years we've really had to focus exclusively upon the R in ROE. In the next 3 years we should be able to focus upon the E as well. We are generating capital, we have started from a really good position. When we continue that, we should be able to increase the dividends, hopefully doubling those by 2021, and to the extent that there is more capital generated within the business that we don't need to grow the business, we will definitely look to be returning that to shareholders. Put all of that together, I think this is then a very, very compelling story and a very interesting 3-year period that we are now embarking upon.